Alrighty, Doc here. TGIF. It's the end of the week. Let's see what we've been doing all week long, basically. That's what it really comes down to. We look at everyday action. We look at how the markets have been moving, what the perception and the idea of what's going on. And we look at very solid data. We work here to try to give you the most insightful, informative, predictable information that we can generate. So, to start off with, you see where we start off with the U.S. dollar against the Swiss this morning. You can see it's been moving back down, trying to get back to the channel. Curious, it's a flight to safety. We always look at the Swiss and the American dollar as the true two flight to safeties. We used to think that, when us currency traders, started supporting the idea of a euro unit, a euro currency, back in the late 70s, early 80s, and that's the 1970s, 1980s. We thought that there was a good chance that the European unit could be a very solid, support or competition to the dollar. Something that we were hoping that it would take over some of the responsibility of being a very strong international currency that people looked towards and ran to for protection. But as time went on, they abolished the Deutschmark and the lira, the Italian lira, and the French franc, and I believe Spain and Greece. It was at the drachma at the time, and most of the currencies did disappear, and they all became the European unit. The euro as we call it. But of late, we've noticed over the last couple of years that the Swiss itself seems to has picked up that mantle of being one of the second products out there, but not necessarily in volume. We don't see the volume, of course, but we see the action in it. Whereas still the euro is 20% of world currency trading every day. The United States is 50%. We're 20%. Japan and Canada, not Canada. I'm sorry, Great Britain are about another 20%, and then from there it kind of dwindles down, into the small numbers, and then you get really small with like China being only 2.7%. So. And the ruble, I'm not even sure where the ruble is. At one point, I'm sure it was like the Chinese, around 2% or something of that nature. So you can see this morning we start off looking at the Swiss against the dollar to get a flavor of what's going on. Oh, and let me go to the chat line. I forgot to open up the chat line, and just to make sure no one's asking for anything. We really like it when people ask questions or have statements or want to see new products or see a product that they haven't seen. That was that's pretty much the gist of it all. And so we watched the chat line to basically get a flavor of what's going on there. Let me get to that chat line. Make sure no one's like saying, "Hey Doc, let's go look at this, that gold or this or that," and I'm not even looking at it. So let's get over there and take a quick peek. There we go. And I'm tuning into the chat line now. I don't see anything so far, so I haven't missed anybody's question, so that's a good thing. That is always a good thing, actually. I hate right now. Other people's questions. From there, we look at the Swiss. You see it here. We see it over here on J4X. We have the channels, and we Fibonacci the channels. We've been watching those channels for a couple of years now. Over here on J4X chart, you can see we use Hinky-Ashi bars to emulate our dots. It's about I want to say it's about an hour and a half behind, but it's more accurate than anything out there, like a MACD or moving averages or any of that other stuff. So this is a much more efficient way of looking at it. To see the direction. This is a daily, so that's not that bad at all. And if you're going to turn it into a smaller intraday thing, then you just do that. In the end result, it'll be much more efficient and not as much as behind. The white line and the dashed gold line here on J4X, or yellow line, represents when it's when it gets above it. You see here, you see strength in the product. When it drops below it, like you can see here, you see weakness in the product. And you see it again here, it bottoms out and tries to take off, and vice versa. You see it top out in here, and it tries to go down. So just kind of giving you a little flavor of how our systems work. And then we come over to our proprietary math right here, where I just put the box up. Same product. What we try to do is we've developed this, what we call the Manhattan indicators over here on J4X, on the Dukascopy charting program, so that you can see that it matches up to our math. And our math is, like I said, is ahead of everybody. If anybody finds something that's not ahead, please send it to us. We'd like to see it. Trust me. I mean, I'm more interested in making money than walking around saying I have proprietary math. Pat me on my back. So, and so you can see here, we got 2 red dots, just like we have 2 red hinky ASCII bars here on the dailies. And you can see we've gone into a sell there yesterday. Let's put that line in. We usually throw a line in there to make it easier for you to see the sell. The sell is represented by the fact that the white line has pierced this 0 line here, right there. And so that gives us direction to the down. And when we're on a red dot or no dot, excuse me, that represents that there's going to be selling. Just like when we went through it here, we got strength. Then when we went into a sell off of this one right there, I don't know where the line disappeared to, but right there, we had weakness for a couple days, even with it trying to pop up and and so forth. And then we got into a buy again right here on this one, and let's put that in there, right there. Oop. Like that. Wait a minute. Cancel. Let's do this. I think I just changed that. Okay, that's what we got. Change that there. There we go. And that's where it went into the buy, because the line is above the 0 line, just like the way we use it here on the 2 competing stochastics. And then you saw your strength kick into this product. And then again, now below is the same mathematics, only on a week-to-week basis. So it was in a weekly buy from, let's see, where's it at? Move it over one. Somehow or another that got moved. So it went into the weekly buy there, and you can see it tries to go up, fails, but still stays above. The histogram and the green line are still in the plus, and so the trend was trying to climb. You could see each time hit the top of our range and then fail. And then our dailies give us a heads up to be careful not to be in a, be neutral. And then vice versa. In the end, we can grab the sell there. And then it went into, it went into a sell there, and then went back into a buy. Let's grab that one there. We'll just put one in. And it went back into a buy again there 2 weeks ago. Right there. There we go. So you see that that's how we follow these systems here. Combining all these things together, and then you go over and look at it on the J4X, and you see the same thing, and it gives you a good insight of where, it gives you a good general idea of where the trend is, and that's the most important thing of all. And that's really where we fight to go, is that we try to keep you in the trend, try to keep you healthy in the sense of not being long when the trend is down, and vice versa. All right, and if you care to see any particular product, just say what it is, and we'll throw it up there, and you can see what our math shows, and we can dissect it or interpret it, or however you would like to describe it. From there, we slide over to, where do we slide over today? We go over to the euro, that euro unit, the second most actively traded product in the world, or currency, that is. It always makes me a little curious, if China is so strong, why isn't their currency like 30% or 40% of the market instead of just 3%? Very interesting. One is obviously it doesn't float. It's not a floating currency, so it's a fixed thing, defined by the government. So that makes it tough. And I bring that up is because we're hearing these stories in Saudi Arabia about might start to take payment in the Chinese yuan. And I'm curious more to the fact, will it bankrupt China? In other words, remember, can you imagine the Saudis selling, a barrel of oil, say it's 100 and, let's say it was $50 a barrel. And then the barrel goes to $100, okay? And the yuan is at 6.3. Well, they're not going to be able to raise it to 6.4. They're going to have to raise it to 12.8. You know what I mean? I can't imagine the Saudis saying, yeah, we're going to discount you oil, because I'm sure they're going to say, no, we'll buy it in yuan, but because I can't imagine them all of a sudden, like today, would they be willing to sell oil to China for $40 when it's trading at 104? And that's the yuan, when we look at the yuan, let's just do that real quick. Let's look at the yuan. It's a curious thing. We'll come back to the euro. But I've been playing with this in my head, trying to understand the reality of it. So the yuan went to, with the Russian invasion, it was in the 6.3 area. Now it's in the 6.4 area. But oil, let's show you oil. It went up from $75 to $150. So how does that work? In other words, when you're like in this case here, it was right there. The yuan was like 6.3, and it's like what back here. The yuan was the yuan was no, that's not oil. Let's get oil in there. Sorry about that. We'll do right there. Where's it at? There's the. Where's that at? There's Brent. There's cotton, gas, light. I think that's it right there. There we are. So oil's trading at 90 at the start of the war, just the start of the war, and it explodes up to 130. So it's a $40 gain, which is a 50% increase in the cost of oil. So a 50% increase in oil. So where does the yuan go then? You know what I mean? I don't understand. I heard that they're going to have meetings about it in May. It sounds like they're appeasing the Chinese more than anything else. And so how does this thing, back here, go from 6.3 to just 6.4? You would assume it would have to go to at least 50% up. So that would be 9. So it'd have to be 9.5. So how does the yuan go to 9.5? You see what I'm saying? I don't understand how they can do what they're suggesting. I don't. It's confusing me, and the media talks about it. So I take it serious. Hey George, how you doing? Morning, Doc. I'm looking for the June crude contract. Okay, sure. Sent out this morning. Looks to me like a buy at the green signal line up through the time manifolds. Yes, and I cleaned it up again too this morning. Went and cleaned it up even more. Let me go. Well, we'll jump over to that right now. Where is that at? Let's bring it up on the screen here, and then and I'll answer that, and then we'll look at your second question. But that's my confusion about the yuan. Would the yuan be 9 out of nowhere? Would the yuan, in essence too? Well, let me answer George and not go back to my mental twisting in my head here. Let me just put the euro back in there for a moment, and then let's go and bring up the contract. You know what? I should leave the oil on the J4X too. Let me put that up on there. There it is on the J4X again. Let's go back to that. Right there. So there's that. Okay, now let's go bring up oil up on the see, so we go like that. There we are, and let's just move that around just a little bit like so. Okay, so let's find crude oil right there. There is, oh, that's May. That's the spot. Now let's go take a look at June. There's June. And I cleaned them up more this morning and reloaded them. And that's the live there now, 99.48. They're backing off from the highs today of 102.27. Now let's take a look at George's question again there. Morning, looks to me like a buy as the green signal line up through the time manifold. Yes, yeah, exactly. It's showing some strength like it has there and there. I saw a good story just to add a story to your question. Some were talking about it this morning on some of the financial shows that I trust. I'll repeat that: the financial shows that I trust, not the spin ones. There's a lot more spin ones out there than the ones I trust. And they were talking about the idea, oil is backing off right now, and you can see it on the chart there over the last week and a half, but it's not going to go down, back to say 60 or 50. There's too much demand. So in other words, all it's doing is now calming down. I'm taking a sip of my tea. My throat was twisting there a little bit. It's going to calm down and then probably start to lift back up again. And there's the talk of $200 oil for demand that's out there. So no, you're right. You can see it. The manifold is lifting up. You can see the manifold contracting too. It's trying to come back down from this distortion in here. And when the time manifold starts to do this thing, notice. Let's see if we can find you a spot for a good example. See where you had the wild action, and then it starts to smooth out from that again. So you had this big sell-off, and you get this big spike on the negative side of the time manifold. Then it starts to turn back up, and you get a daily buy here, and then the manifold starts to get trapped inside this big range and starts to allow it to breathe. I guess you could say that's how I think about it. Allow it to breathe. So that's the interesting point. Yep, you're right. They're showing a lot of strength in here, and it probably means, well, you can see the weekly's not going into a sell this week, and it's not even touching. It's barely touching the time manifold. Okay, let's read your second one. So weekly still in buy, right? Yep, exactly. See that? You're getting comfortable with reading the math. That's good. Only thing that worries me is that a bit is that the green signal line still sloping down, but it's positive on the week. Exactly. And that's digesting from this action in here. It's digesting from it. It's a smoothing out from it. But yeah, and you see it here. You can, like, here's a good one where we had this run in oil back in here in January from the 70s, the low and mid 70s. And and let's squeeze our math together for a second so you can see it a little bit better. And it's gone from a sell. We were in a sell for, I guess, a couple weeks or a couple months. We were in a sell from the, what was that? The mid 70s area, and we slid down to the low 60s area, the 62. So it went down about $12 in that weekly sell. Then started to bottom out. Right, you're seeing the green line start to turn up here. When it finally meets the time manifold itself, notice it's still sloppy. Even with it trying to pick a bottom, and it does a really good job. The thing does catch falling knives well, and you can see it's sideways. It goes down. It comes down into the 65 here from that 62.90 low or 63. It's still, it hasn't gotten the energy yet into it. That's that William O'Neill cup and saucer and the handle thing right there. That's what that really is. My math picks that concept up that William O'Neill from Investors Business Daily uses for decades. And the math picks that up in a whole different form of math. You can see that the handle doesn't go as low. That's why they call it a cup, where you got a cup and then you got the handle like that. And so it does that. The math represents it. You see it gets into a daily buy here, and it's now starting to pierce the time manifold, as you said. And that's what you were worried about, the downwardly slope. And so sometimes the down, like you can see here, and the reason I pulled it back that far is you see here in the oil contract, it gets into the weekly buy, it climbs for a while, peaks out here, the green line, right? And then at the same time, notice the upwardly slope still going on, because the most important thing of all is when it breaks this more than anything else. That's when you're worried. You have to be worried. And so you can see here we're, what is that, like that's 87, 89, 89.92, so almost $90. And it's starting to break down here, right? You see that there? And what does it do? It goes down to, is that the low there? Of 84 from 90, 84 and a half. That one is 85, yeah, so 84 and 84.56. So it drops about $5 with that little bend, and then it starts to, the next day it starts to lift up here. And you see it through the line here, right? And then look at that, from 86.67 low, from that as it's turning up. Let's give you a, let's put a line in there too for you. Where's it at? And you'll be able to see the connection to it all. Let me do this. Let me move this over just a little bit for you and me. There we are. So right, where was that at? Right there. Okay, so let's make that a white line so you can see it. There you go. And now we'll move it over like that. And you can see right there, it breaks through there. Now, what the question you've asked is doing that in the reverse direction, and now you're seeing that strength kick up even more. And so with the green line, let's move it over now so you can see it there. With the green line coming down off of that high and missing the peak, I guess, by the weekly missed the peak by, what, 4 days, right? Turning down. But the daily almost peaked out perfectly with that right there. Let's move that line over to show you. So right there, the next day it closes there. That's the peak, and it's breaking down. That's that curve that you're looking at, and I agree with you. You're reading it right. And so here, now we move over to here. The weekly has been driving down. It's just kissing the weekly. The question is, will it bounce off of that? We'll see the green line on Monday or Tuesday start to launch like it did here. And due to the fact that we see right there, I'm going to put the white line right next to it. Notice we went into a daily buy there with that weekly buy and the curve up. Then we watched to see if we went into the daily buy right here now. We'll put it the day before. There it is, the white line representing it. Or, showing you, there's the green, there's the daily buy now yesterday. Are we going to see this thing bounce off of that and start to take off again? And that's what you're basically asking about, suggesting, and telling me at the same time, which is good. You're reading it right, yes. And so that's the way it goes. Now the third question was, I'm reading this right or missing anything else on this quant? Thanks. No, I think you're reading it well, and you're starting to read the nuances of the time manifolds themselves. There's no doubt about it. It's all one question because of a 200 limit per comment. Thanks. Oh, that's no problem. It's just the way I break it down. It's easier if we go slow and look at it the way you asked. I like the idea of small sentences, and we just go answer each subject of it. Like it's aiming down, and I can respond to that, and then it's hitting the manifold, and I can respond to that. This way, I am able to confirm to you if you are reading the math correctly, and everything you wrote. You're reading it correctly. Exactly. And gave me an opportunity to showcase the ability of the math. How it works like that. And we can go back further where you get this, it tries to break through there and doesn't for another week. And then when it finally breaks through it, you can see much more aggressive movement on the upside, even with the red and the greens. And being in a sell there, and then it jumps in the buy. Now remember, these are future contracts. They're only alive really about 30 days, of action. So they get a little sloppy at times. That's why we follow a front month and then we follow a back month, because sometimes the back month smooths out the action. Sometimes it doesn't make any sense. I mean, not make any sense. It makes sense, but it's not as indicative of front month action. I hope that answered all your questions. I love it that you're asking them, because one of the things that made me stay with Dukascopy throughout the years is the fact that I can actually respond and display real successful math that works. And at the same time, we were able to develop some of it on J4X and put it on the J4X chart, so that traders for Dukascopy and Swiss Bank and so forth who use their platform can actually try to emulate our math, and at least have, when during the trading day, like right now, you can see anything live, and we can show it to you. But in 2 hours, if you see something and you're not like a subscriber to my operation or something like that, at least you can go to Dukascopy and go onto their platform, look at it the same way I look at it, or you can put it on your platform and emulate it with the public indicators that we use. And so that's why we have the two systems running next to each other. It's not to say one is better than the other, as much as we're trying to show you the most accurate predictions of each of them and how they work and how you can use them to make money. And that's pretty much the name of the game. Oh, good. Good response. Thank you. Yes, I gave a good response. I appreciate that. Thank you. Love it. Love it, love it, love it. That's why we look forward to people asking questions, because then someone might jump out and say something like Kelly or something like that, and go, hey, let's look at that yen again, against this product, or 47 will jump out and say, what's the GBP yen looking like? And then they can get a better grip on the action on a day and weekly basis, and then they can take the the indicator that I put up on the J4X and utilize that when you're not able to talk to me or you're not subscribing, that type of thing. Gives you a good fighting chance, let's put it that way. Can you please explain the red and the green dots on the top bar chart, how you can use them? Right. What we want them to do is we want them to align with the so in other words, let's show you a couple examples. Sometimes we can be above the 0 line but with a red dot, or a red and green dot. Now a lot of times red and green dots together on a bar will represent that some action is coming. A little bit more, like, see how tight it was right here for a couple days? Just really tight. Even that day had no dot at all. And then, it got really tight and we get a red and green dot, and look what happens. It goes from 86 that day to no more than 2 days later to 89.92. Almost a $4 move almost. And a lot of times red and green dots will tell us action coming from coming ahead of time, like right here. Notice the last 3 days there was really tight, and then we got a red and green, and then all of a sudden it closed at 65.26, and 3 days later it peaks out at 71.39. It runs like $5. A lot of times a red and green together will emphasize some wild action coming. When in this case here you can see we have a daily buy with the green dot. That's a buy signal. But let's see if we can find one where we have a red and green. Let's see. Let me widen this too. A lot of times in some products, let's move that down too. Some products, we'll get you'll see me do this. Matter of fact, let me see if I can find one. But you'll find me putting a bar up on the top here, because it's not confirmed until it's on this chart here. and then I know I saw a grain or something like that doing that. I'll try to find it. The next time I think what I'll do, let me do this. Let me just explain it, and then the next time I see one, I'll save it, and the next webinar I'll show it to you, how the red and green dots, I'll label it as how the red green dots work or something like that. But in the end result, this way you can come back and look. Now, here you can see we had a green dot, but there are times where we can get the green line over the 0 line, but we have a red dot still, or we have a red and green dot. So we don't take that signal until we get the next bar. And if it's above, the green line is still above the 0 line, then it's a buy. And as long as it's got a green dot too, and vice versa, or no dot, one or the other. And vice versa on the downside. And many a time it's another layer of protection basically. I hope that helped out. And so the Hinky-Ashi, what the Hinky-Ashi math does is a lot like what generates my red and greens. And the only difference is it's kind of a laggard indicator, like the way MACD is a laggard indicator to our work, and MACD is a laggard to our Manhattan indicators on Dukascopy. With the two stochastics competing against each other, and the Hinky-Ashi bars up there. I hope that answers it. And if not, just ask again. Remember, our traders, I always tell everybody, there are no dumb or stupid questions in trading. There are no silly questions in trading. Well, I mean, you can, but either way, as far as I'm concerned, I find silly okay. But what there is only short or long answers. When you're dealing with money, all questions are good as far as I'm concerned, because you don't know what you might learn or might figure out. You're dealing with money. You're trying to make money, not lose it. So any question is welcome. Or if you just want to see a product and get an idea where the trend is, no problem. Just ask it. We'll stop what we're doing and we'll go quickly run to it. And like we just did now, I was on the euro, and here we are analyzing the math, analyzing crude oil as an example of it. Or in this case here, this is what George was looking for. He was looking for oil. So we stop what we're doing in the currencies, go over and look at it. And then we go back when no one else asks the question anymore. Then I go back to looking at all the other products again, just like our what we call the normal rhythm of every day. We'll go to the euro. From the euro, we go to the cable. From the cable, we go to the Turkish lira. And then from there we go to the Canadian. And then we look at 4 other currency pairs. And from there we jump into the the energy sector, and we jump into the metal sector, and then we look at the stock indices. Cool. Thank you, George. You're welcome. As I always say, questions are cheaper by the dozen. So, in other words, you've just asked one. You're welcome to ask another 11. All right. Let's go back to the euro, unless anybody wants to see something. There it is right there. You can see, it's moving up. You can see that line moving up, and we really do have doubts that they're going to keep it down. We really don't think that's going to be the recipe here when it comes to the euro. We think it's at the bottom end of the range. We know it's at the bottom end of the range because we've been watching that range for a couple of years. And let's put it up on the screen here. There. Bounced off the bottom of the range right there about a week and a half back. You can see here, I'm not sure why we have a white line there. Let's fix that and make it uniformed with what see, so the histogram is going to be white and the line is going to be green. There we are. There we go. Oh, you know what we did? We made the time manifolds blue and yellow because we had the Bollinger Bands up on the screen, and we showed how the Bollinger Bands work behind our math, not in front of our math. In other words, our math is a leading indicator to Bollinger Bands. Bollinger Bands are a lagging indicator, and that's why it's red and green here. Someone was asking us about Bollinger Bands, a couple months ago or something like that, or whenever. And once they ask it, I leave it up there just for the sake of it. And I guess at one point we had Bollinger Bands on the screen, and I'm not sure where they got to. We could take a quick look and see if they're still on there. I remember erasing them just recently too. Oh, there it is. See, they're turned off right there at the top. Bollinger Bands. And so that's what that's all about. So you can see here, whereas the weekly did exactly what George was asking about. It's broken down below the time manifold, and here we see it gliding along, and then finally fully breaking, just the way it did there. And now you can see the green line is trying to get back up to the time manifold. We are in a daily buy now. If we were in a circumstance like right here, but you notice our daily buy was there, we went into a weekly buy there, and then you notice that it started to drop right underneath the time manifold, giving us a warning that the strength was disappearing on us. In other words, all that strength we saw from that daily buy, and there you can see there too, we had a red and a green dot the day before it jumped into the daily buy right there. And like I said, a lot of times like here, you can see the red and green dot. Can you see that right there? Yeah. See the red green dot right there? It broke down. It has a habit of doing that. The red and green dots, they pick up, they're very sensitive to volatility. That's what they do, is they pick up on that volatility and tell us that something wild action is coming. Now you can see one here. It wasn't much, it bounced up for a couple of days. There was a little action to it, but it seemed to stall out, and probably because, again, at that point the green line is breaking the minus side of the manifold, so you have to start thinking, oh, this thing, whatever's coming from it, is going to be on the downside of it. And of course, that's what it was. You can see it there. It becomes the downside of it all. So that's what's reading the nuances. And then now you can see here, as we just said, you can see the red and green there. You can see the daily kicking up. So we know there's some type of strength, and this is curving up. But it hasn't pierced the negative side yet. So we don't think this has a lot of life left in it. That's how we interpret that. Does that make sense, George? There's a good example, again, of the action and how to read the manifolds with the green line and the dots at the same time. I think we're going to label this How to Read Doc's Math on J4X, or Doc's Math and J4X. That's it. I think that's how we'll label this. This is a good webinar, for people who don't always tune in, and they look at this and they go, what the hell does this all mean? What's all these squiggly lines? Hey, what's that squiggly line? Good, thank you. I always like to note I'm getting through and making myself very clear. That's the whole idea. The professor is in me, the doc. I like to try to make it very clear, and I don't want to be like, this is what I say, so this is what you're supposed to do. No, this is what I always say: free people, free markets, free people, and live free or die. That's my mottos in my life. I believe in both of them, and you can see the Ukraine people are doing that right now. They're trying to live free, or they'll die. It's one or the other. They're going to fight one way or the other. Live free or die. And at the same time, free markets and free people. And they don't want some command and control economy. They want to be the controllers of themselves. And that's what I do when I show you my math. I'm not telling you, oh, I told you the green line is plus. Why the hell aren't you long? I don't do any of that. I'm not into that. Everybody has to read the math and take it. I don't know what your pocket, how much money you have compared to somebody else. So I'm not going to give advice on how to invest. I can only give advice on how the math is showing you where it's trying to go and how it goes. And that's the whole gig right there. All right, from there, let's jump over to the cable. See what the cable's doing this morning. Oh, and let me save this so it doesn't come back as red and green tomorrow. Not red and green, blue and red tomorrow. So we'll save that. And then now I'm back to that again. No, I don't want to save that. Cancel. I want to save it as. That's what it is. And I'm back in my head again. I'm starting to really figure out what, my first inclination was when they said that they were going to negotiate with the Chinese that they may consider taking payment in yuan. It will probably be like an oil yuan. And so the oil yuan might go from like, one day it's at 6 and the next day it might be at 8. And then the next day the thing could be at 15. I mean, that has me very curious. I mean, who is thinking of, the Chinese keep on asking for these things, but they don't have the tools for them. I mean, do they really want to see their currency double in a 3-week period? I mean, right now they have it as a fixed product that doesn't float. So, you have to trust that it's valued at what it's valued at. They don't give out puts. They're not giving out any puts, that's for sure. And so, I'm really curious about that yuan situation. That's why I've been talking about they only trade less than 3% of it in the world. I'm confused. I don't understand how they think they can trade oil in their currency. I can't wait to find that one out. That'll be fascinating. I can't wait. Oh, George says, if you went long a crude oil today, would you hedge it right away with an option hedge? It all depends on how much capital you're using and how long you want to be long. If it's like a 2-week... First of all, let's go back to oil to answer your question, too. Let's look at that. Where was it? It's around here somewhere. Okay. There's oil. First of all, we got a daily buy going on right now. But what and we're waiting to see how this green line goes, if it busts the manifold or not. I think it's not going to do it. I think it's going to bounce like it did here. In this case here, it dropped underneath it for about a week. And then you can see the pressure on it from that point. It went like that. It went down, and then, matter of fact, it took a while to get it to a sell. It was so strong. Which really kept on telling me, don't be so fast to try to short it. Thank goodness, look at that. I mean, it went from... Where'd it go? From that daily sell, it went from 88.84 close and an 87.61 short. And if you go and short one of these things, you're going to find a way to short the low to begin with when you're fighting against the math like that. And because the main theme here is it's in a weekly buy still. So you don't really want to... You're fighting the math by trying to short it, right? So then it finally, after a couple of days, it gets back into the buy. And what a rip your face off move, I mean, it goes from, what is that, basically, like 96 to 130 in 6 days, So it goes up $40. So in this case here, answering your question, if you went long a crude, would you hedge it? I don't think I would get long it at the moment until I see a little bit more confirmation. I would, yes, wait a minute, let me just rephrase that. I wouldn't get long it right now. With the future, I would probably buy a binary or a call spread to start off with, just to have a position, thinking that this could be another bottom and it might go to 115 or 120. May not take out the 131, 132 area, but this move could... You got to figure that from here, it will do at least a 33%, right? So it went down to 93 from 37. So you're thinking about basically $12 moves. We're flirting with the first $12 now. So I look at it, I always drift off to the Fibonacci from there, because Fibonacci is a lagging indicator to our math. But it's a really good indicator overall. So what we've seen already from the sell-off is it's gone 33%. So it may hesitate up here a little bit. So buying like a 3-month call spread, or a 2-month call spread might be the answer to being long, not the futures yet, because we may go sideways for a week or a week and a half, and you don't want to get margined out if they put some pressure and drive it back down again by just being long the future. Now you could also, at the same time, to stop some of that, is you could go sell the use the Fibonacci again for figuring out a call, what strike price to sell. And what you could do is you could buy the future, but then at the same time marry it to options. And you could go and sell, say, the 120 call, and then and use some of that money to buy a put down below it, like the 90 or 95 put or something like that. But do it for a credit. In other words, whatever you sell the call for, at least try to break even on the put. or just a little, or maybe pay barely pay any premium on the put. It's compared to the call sale, and then at the same time you're long the future. So as it vacillates back and forth over the next 4 or 5 days, if it doesn't get going, because it's kind of doing that digestion of the first 1/3 rally back up, and then what happens when it does take off, you haven't been beat up too much at all, and you won't get stopped out on your futures contract since you own a put. And at the same time, your call is paying for it, and if it explodes from like I said, around par or 99, where is it trading at now in June? 99. So if it runs to 112 or something like that, or 115 or something of that nature, it does the half from there. What's that? Half would be 18 points, right? So 18 points would be basically 108. If it runs to 108, you're going to make 800 points on the futures contract, and you might lose, say, like 400 points on the call and the put, but you won't get stopped out. You'll still make money. You'll have enough delta. So, does that make any sense to you? Let me follow through on the rest of it. Would you hedge it right away on an option? And when you put on the option hedge on your trades, you put on, let's say, let me read it over again. If you went long rate, okay, we read that part. An option hedge. When you do put on an option hedge on your trades, you put on question mark. Thanks. Okay, good. I answered that. So I spilled out two different concepts. One is bull spreads or binaries, because we think that with the way the math is showing us, this could be a digestion now. In other words, it's done its 1/3 bounce. It could be sitting around, or maybe it'll do the 50% and get up to 108. Maybe it'll do the 2/3 because the world is starved for oil, and you might end up in what's that, 24 points. So you'll be up to around 22, 122 in the futures contract. I think that it's going to start to get back to normal. Remember, a lot of that spike was the idea that the world was going to be in real problems with the energy sector. So, let's see. George says, so selling a call, use this to buy a put to protection. I understand. These answers about trading and your quants are priceless. Well, all I can say is thank you very much on that last part of the sentence. And your quants are priceless. That's nice. Answers. I just try to, that's why I'm the doc. That's I'm the professor of this. That's what I try to do. I try to make it understandable for everybody. And if anybody doesn't understand what we're talking about, you're welcome to ask, and we will give you, like I said, there will be a short answer or a long answer, but there will be a legitimate answer no matter what. Like what are calls and puts, or what are binaries, and I will point you in the direction where you can read about them, and then you can come back another day and ask us to explain them to you, and we'll spend just as much time trying to explain them to you. And that's what we do here. And George, thank you very much. I appreciate the kudos and the compliment. Thank you very much. So now, George, you only have 10 questions left to go. Remember, cheaper by the dozen. Let's see, where were we at? Oh, cable. Let's see what's going on in cable. So you can see cable's trying to turn up. We've got the white line on the J4X moving up there above the dashed line. We got 3 green bars now. And let's take a look at it again on Chicago Quant. Right there. Yeah, that's what there it is. You can see it even. On this one, it has the Bollinger Bands on it. See it right there? That's the Bollinger Bands. I'll make them a little bit thicker so you can see them. And that's why we changed the color of the manifolds. There it is. See them on there? And so we were trying to show you how the manifolds, my nonlinear time manifolds as I call them, that's my name for them, how they outperform the Bollinger Bands. See how it made the low. Let's put a white line up there since we have a live example of it right here. Right there. So you can see our work bottom zero on our manifold, right? And you can see it's turning up. This one takes a couple days to get there. It starts to turn up there. Our math is ahead of the Bollinger Band. You can see the peak there. And you see it's curved too. It's heading down. So it's catching up there. And then let's find another one, like where we are now. You see it curved right there. The Bollinger Band started to curve right there. You can see our work curved right there. You know, what's that? 4 days earlier. So, George, that's no problem. I've been here a long time. I'm not going anywhere. You see our website. You know, you see the Chicago Quant stuff. We're around. We're not going anywhere. We're just a bunch of old traders between Robin and me. You know, we have almost 100 years of experience between the two of us. Robin's like 47. Hell, Robin used to trade eggs. Can you imagine? Robin went from trading eggs on a trading floor of an exchange to literally making the very first trade in the S&P 500 futures contract. Talk about, you know, like horse and buggy to a ride to the moon. You know, between the two of us, you know, we've been around almost 100 years of experience. So, for us, this is not hard. This is easy. You should see Robin with some of the clients. He reads them the Riot Act. He's like, "Don't you want to make money? Why are you fighting the math?" He's like slapping people in their mentally slapping them. It's like, you're fighting our math. Why do you fight our math? Our math is going to make money. Don't fade us. You know, he's like, you know, slamming away. So yeah, I mean, you know, between the two of us, you know, we got a good math, and you know, we don't have a problem sharing it. We have a service. You know, we make money from it. You know, we've made money from trading. We're happy guys. You know, I'm 67. Robin's 70 years old. I mean, what do you? There's no trading. You know how it used to be? Let me just tell you this. When I was a young guy, you know, when I was a kid on the trading floors, there were these old guys. They weren't trading anymore. They would walk around in the most expensive suits, and they would sit there and just stare at the tape and get their shoes shined. We used to have shoe shine people come in on the trading floors, things like that, you know. And they would just hang out. They'd barely talk to you. They were just there for the action. They weren't trading much anymore. They were watching their positions. They were old. They'd been trading like us, you know, for, you know, 20, 30, 40 years. And we don't have that anymore. We don't have that luxury, Robin and I. We don't have exchanges anymore. There's no exchanges to go to. You can't go hang out on an exchange floor anymore and listen to the young guys battle it out, you know, in trading pits and so forth. We don't have that. It's gone. It's history. We're in the electronic age now. We're in the proactive age, not the reactive age. So to us, you know, it's kind of fun, you know. I mean, doing this, this is the what I do, I call this the electronic pit. That's what this is. This is the electronic pit, basically. You know, because the pits are all gone. George says, yeah, Robin helps me a lot, too. Always takes the time to answer questions, even when he's busy on the phone. Yeah, well, we're traders. I mean, Robin used to work a deck of, you know, he would fill orders or he'd be trading for himself. You know, we're used to multitasking as traders. There are no dumb questions. There are no stupid questions. There's only long answers or short answers. That's all there is. But we can't go to an exchange floor and stand there anymore. Last time I was on an exchange floor was like 2012, something like that. 2011, I was on the CME. Before that, I went down onto the Philadelphia exchange floor. There was nobody there. There's no crowds. There's nothing. It looks like something out of. I was on the Amex back in like 2014 or something like that, the American Stock Exchange, and it was literally like that movie where I think it was Michael Douglas, where they have all these people in like floating, like in canister, like some type of devices connected to like ropes or chains and electrical lines, and it's like everybody's asleep. It was like you went down on the trading floor, there was no lights on. It was like there was like one light for every 4 lights on. The place was dark. There was nothing going on. There was no screaming and yelling. I went on to the Philly floor. It was the same way. The lights were lower. There was like a dozen people on the floor. That was it. You know, like making sure the computers are still running or something like that. You know, you go from 3,000 traders and clerks running around screaming and yelling to 12 people. I mean, it's an empty warehouse. There's nothing going on. So, this is it. This is the electronic pit at this point. That's why we're willing to answer any question, talk about any subject. It's like being on the trading floor. All right, let's see. Oh, cable. Let's see what cable's doing here. Where are we at? There we are. And let's look at it here. You can see here. Yeah, we've changed the colors on there. Let's fix that too. Yeah, I changed those colors just to help people, when they were looking at Bollinger Bands and trying to understand what I was talking about. But, matter of fact, I'll leave it there because there's a good example of the Bollinger Bands situation. But you note that the top and bottom manifolds are what they are. We've explained that to you. And you can see let's fix the line, but let's fix this though. So let's make the histogram correct is a white, and the line is a green, and then we make it, show you the number over here on it. So you can see here, the green line has pierced the manifold. And we are seeing, I don't know, we had candles on there for somebody, so that's why the candles are so freaky. Let's turn them into bar charts or something, basically open, high, low, close charts. Setting style. There it is. There we are. So you can see here we've had green dots for the last couple of days. We emphasized the trading range, because a couple of days ago, that's why it was so thick, because it had pierced the trading range. And you can see here it's brought itself back up to the trading range, and you got the green line moving up. You can see the same thing over here on J4X. It's moving up. Only difference is that it's trying to curve a little bit now right here. You can see that curve is developing. Where's that? Right there. We're curving a little bit. A little weakness here today. Back on the line. So, all right, traders. Everybody have a safe and smart weekend. We will catch you all on Monday, TGIM. And what else can we say about all that? Good questions today. And we will, everybody stay safe, especially along the three borders there, Poland, Slovakia, and Hungary, and Moldova, and more borders, and Romania, and Belarus. Hide. Hide, guys. And so, happy trails to you until we meet again. It'll be Monday. Happy trails to you, to all our trading friends. Later, traders.